Hello and welcome. In contrast to the global financial crash, one area of banking seems to be thriving. Microfinance institutions are continuing to grow based on their record for low risk and solid returns. But at the same time, there are now 2.1 billion people in the world who are unbanked. So how can microfinance provide a foundation for reviving the world's financial systems? Microfinance gives small-scale financial services such as loans, savings, insurance and money transfers to poor customers who would otherwise not have access to banking services. Microcredit, an important component of microfinance, involves offering very small loans to poor clients without any collateral and often without any written contract. As it falls outside the mainstream economy, it's resilient to global market movements. But it's not all good news. Established barriers exclude low-income consumers, and financial services are not open to the world's poorest, making it extremely difficult for them to be lifted out of poverty. On today's show, we look at the financial services for the world's poorest and ask, how is the global financial crisis affecting microfinance in developing countries? I'm joined by two women who are at the center of a major effort to bring financial services to everyone who needs them. From The Hague, I'm joined by Her Royal Highness Princess Maxima of the Netherlands. In 2006, after a successful career in the banking world, Princess Maxima joined the United Nations Advisors Group on Inclusive Financial Sectors, which was tasked with following up on the result of the Year of Microcredit. She remains a UN advisor for the group. In addition, she and her husband, Prince Willem-Alexander, are patrons of the Orange Fund, which was set up to promote social welfare and cohesion in the Netherlands. From Lahore, I'm joined by Roshana Zafar, the founder and managing director of Kashf Foundation. Kashf has grown from just 15 female clients in 1996 to 82,000 clients today. It's one of the fastest growing microfinance institutions, or MFIs, in the country, and the first one to achieve financial self-sufficiency. Roshana is also the founding member of the Pakistan Microfinance Network. I welcome both of you.
Thank you.
Princess Maxima, if I may start with you, please, Your Highness. Why is it so important? I mean, you're working with the United Nations on this. Why is it so important to make banking accessible to people across the world, to basically touch the poorest?
Yes, Mr. Khan. We know already that a good developed financial system not only promotes growth in a country, but also reduces income inequality in a country. So it is very important that people do have access to financial services across the board. And when we're talking about that, we're talking about not only about credit, but also savings, transfer payments, insurance, etc. So the important issue is that people can actually, with savings, they can save for something they would like to spend in the future. They can actually invest in their businesses. They can actually save for something that might actually happen, like illness or death. With insurance, they can actually have health insurance. They can also even have crop insurance, etc. And for payment systems to be able to pay in a safe way, not having to be assaulted in the street when they have to do a payment, etc.
Well, Roshana Zafar, good to have you with us, and congratulations on the success of your foundation. Let me ask you what you've seen in terms of visible results. Obviously, 15 clients to 82,000, phenomenal, well done. But what have you seen in terms of real lifting up of the poorest?
Well, I think the impact or the success of microfinance has many dimensions. The most important dimension that I'd like to share is the impact it has or the weight it carries for future generations. The fact that you give families the opportunity to make their own choices, financial choices, to make sustainable financial choices, and to be able to leverage the future generation. For example, over the years, we've seen a higher incidence of quality of healthcare for our clients. We've also seen their children more likely to be going to better schools. For example, the uptake of education, if we compare control groups who are not using microfinance facilities and our clients who have been with us for a period of 3 to 5 years, there is a greater likelihood that their children are going to better quality schools, and that their children are more likely to go beyond primary education. One of Pakistan's biggest problems today is the retention rate of children in schools. And we've seen that with microfinance, the retention rate of children in schools is actually increasing. And I think I personally believe that that is the miracle of microfinance.
Princess Maxima, an important thing I think to look at is the barriers that exist, the systemic barriers as they're known, the established, I guess, institutional barriers. What have you had to fight? What are the barriers in place that you're having to fight?
Well, that's a little bit what our job has been, and one of the things that we've actually accomplished was a set of key messages for government, regulators, development partners and private sector. Because the barriers are many, and for example, you need to have a good regulatory environment to make this possible, because even though sometimes regulatory environments are made to protect consumers, sometimes they do hamper access to finance. In the case of overall macroeconomic policy, a stable macroeconomic environment is very important for the growth of a financial sector, and that this financial sector is also accessible to all people. In terms of development partners, they have, NGOs have a fantastic role to play here, not only in the beginning funding, new startups, but also improving their capacity, which is really lacking in a lot of places in the world, to really help them to become, only credit institutions to deposit-taking institutions, etc. And also the private sector to become aware they do have a role to play in really taking this into an enormous scale.
Actually, Your Highness, if I may ask you about, the traditional banking sector, of course, which you are a part of, has certain motives. It has obviously a profit and gain kind of incentive. How much of a mental barrier is there for banking institutions to look at the idea of microfinance and microcredit, to take a different approach?
Well, it is, first of all, it's very much back to basics, and it's about sort of, to be the intermediary between, the one that is saving to the one that is taking the loan, and these are very, very small loans. So it's a completely different type of business. It's not the type of window that you have in a normal branch or a normal bank down the street. So it's a completely new reassessment, not only in the distribution, but also in the way that you define the product. If you're talking about a savings product, you have to talk about a savings that maybe is only for a certain amount of time, that has no minimum requirement, that has no fees, etc. Because all of these are barriers to entry.
Roshana, if I could ask you the lessons you've learned, the mistakes you made perhaps, and the lessons you've learned in setting up your foundation that might be useful to other organizations or other people looking to do what you have done to replicate your model.
That's a very interesting question, and do you want the 1 minute answer or the 3 hour answer?
Well,
but I'll try to I'll try to elaborate it. I'll just summarize it. Well, I think microfinance, running a microfinance institution is a constant learning, obviously. Our challenges were phased according to the stages that we were as an entity. Our first challenge was obviously designing the right products, exactly what Princess Maxima was elaborating, that access is about product design, access is about methodology. So our first challenge was really getting that right, and the challenge we faced as a entity that was trying to bring in women into the fold of inclusion, financial inclusion. Our first challenge was actually making this women-centric. And that was really the lesson that we learned, that microfinance methodology really requires working with groups, working with solidarity lending, especially if you're wanting to target women. So initially we didn't have that concept, and with time we had to build that in. Our second challenge was really about the frequency of our contact with our client. When you talk about the principles of microfinance, one of the other points to remember is that it's very important to collect your micro loans in small frequent installments. It's very important to exercise or have deposit products that are flexible, as the princess already mentioned. So that was something, you can't have inflexibility in your modality, and that's something we had to learn with time. And our third lesson was really about recovering our money. How do we get our money back? Right. And that again had to do a lot with coming up with strong client and staff relationships, and elaborating upon a strong customer code of protection. I think that was another very important lesson we had. And now, we build our methodology on very strong principles of client and microfinance institution relationship.
Okay, Roshana Zafar and Princess Maxima. Sorry, Princess Maxima, bear with me. We're just going to have to take a very short break and we'll get right back to your thought as soon as we return with more of this discussion. We're right back in a moment.